Welcome everyone to today's webinar on Errante MetaTrader 5. My name is Ali Mortazavi. I'm the head of education, guiding you from the basics to advanced features of MT5. Today, we will uncover how MT5 can be a powerful ally in your trading journey. We will ensure you can set up your workspace, understand market analysis tools, and utilize advanced functionalities to tailor your trading strategy. Before we dive in, can everyone please confirm if the presentation is visible for you and my voice also audible? Please signal any issues now so we can ensure a smooth learning experience together. I will wait for a minute to get your confirmation, please. Just give me a thumbs up, that would be okay, or just write down the okay through the chat box if you can see my presentation and hear my voice. Very good, very good. Thank you so much. Thank you for your cooperation. Thanks a lot. Let's embark on this journey together, mastering MT5 with Errante. Let's begin by introducing Errante. We are an online brokerage firm committed to providing premium services. Our focus is on building enduring and trustworthy relationships with our clients and partners, offering a personalized trading experience tailored to your needs. And please note that the content presented today is purely for educational purposes. It's not intended as investment advice or a trading signal. Make sure to perform your own analysis before making any investment decisions. Because it's really important to say that trading CFDs involves a significant level of risk and is not suitable for all investors. A sustained a substantial portion of retail investors usually lose money when trading CFDs. So you should understand how CFDs work and whether you can afford to take the high risk of losing your money. This information provided today is to help inform your trading strategies, not to serve as a directive for making trades. Okay. Throughout this webinar, we will navigate several key modules to enhance your proficiency in MetaTrader 5. We will start with an introduction to the various types of pending orders, learning not just what they are, but how and when to apply them effectively in your trading. Next, we will delve into MetaTrader 5 additional modules. This section will expand your toolkit with advanced chart settings, detailed trading insights for each symbol, and new features that distinguish MT5 from its predecessor like MT4, including the integration of a new calendar and various time frames. Also, moving forward, we will explore the analytical tools in the navigation window and main menu, which are instrumental in crafting faster and smarter trading decisions. This comprehensive understanding will enable you to leverage MT5's full capabilities. We will also cover trading management. Here, you will learn to extract valuable insights from MT5's detailed trading history and statistics, empowering you to develop and let's say calculate a robust trading plan. And lastly, we invite you to participate in an interactive Q&A session. I encourage you to ask questions as they arise during our discussions, while I will address them at the end of this session. This interactive dialogue is vital for clarifying any aspect of the MT5 platform or trading strategies, ensuring you leave this webinar with a clear, actionable understanding. Very well, so let's set forth on this journey to master MetaTrader 5. As we embark on this journey with MetaTrader 5, your first step is to download and install the platform directly from Errante's portal. This ensures you receive the version that's fully integrated with Errante's unique features and services. Make sure if you can see my web browser here, my Explorer. Okay, very well. Okay, as you see here, this is the Errante.com website, and then you can just log in into your member portal using this study private. Okay, here, this is your portal. As soon as you open any new account, trading account here, you will be guided through the platforms as you see in this menu. And here you can choose between various trading platforms that Errante is providing. Which one of them is the MetaTrader 5 for Windows, and then you can download it and just go through all the process. Very easy. And I remember that I explained it before in our previous webinars about the MetaTrader 4. But one important thing, that's after installation, logging in correctly is crucial. And here how we can confirm that you're properly logged in. Once you open MT5, look at the bottom right corner here and of the platform, and you should see a connection status bar. A stable connection is indicated by a green bar, as you see here. Next, navigate through the navigator tab when your account name and your account number should be listed. If they displayed your correct Errante account number, you're all set. Okay, so should you encounter any issues during this process, our support team is ready to assist you. Remember, starting off on the right foot with a proper setup is key to a smooth trading experience. So let's ensure that each one of us is set up for a success. And I really encourage you to do this process during this webinar. So if you have any question, you can just write it down to me and I will answer you as soon as possible. Okay, so let's discover how MT5 helps both beginners and experienced traders with advanced capabilities that it has. MetaTrader 5 or MT5 represents the frontier of trading platforms, offering a multifaceted trading environment. Each section of MT5 is designed to enhance your trading experience. Firstly, we have a more complete tool details. MT5 provides an extensive array of analytical tools, allowing traders to delve into the technical details with greater precision. If I want to show you, firstly, you can go to the insert menu here, and you can see more indicators are included in MT4 and more objects. You can choose line channels. Fibonacci tools are more completed here, and also you can get access to Elliott waves if you are a fan of Elliott theory. So which means there are let's say wide array of different tools that you can use. Also, more time frames are available, ranging from 1 minute to 1 month. Again, during time frames, you have two options to get access to them through here. See, from 1 minute, the H1, H4, weekly, H3, H8, and you can just go to customizing them through this menu, and you can make them remove anyone you don't want to be visible at the top menu if you don't you don't use any of them. So this is another very great feature of MT5, more time frames, ranging from 1 minute to monthly time frames, offering flexibility to our trading styles from scalpers to long-term investors. And next one is the economic calendar that we will jump into it in more details later in this session, which is integrated directly into the platform, a crucial feature for fundamental analysis that helps traders anticipate market movements and plan trades around key economic events. Then stop limit orders add depth to risk management strategies, enabling traders to set precise order entry points in the market. Lastly, thorough reporting capabilities of MT5 offer detailed reports on trading activity and history, assisting in a meticulous review of your trading strategies performance. Each of these sections within MT5 is designed to provide a robust trading experience, allowing for tailored strategies and informed decision making in your trading activities that we will get through more details during this webinar. So here is the important modules. We have the market watch. You know, if you were with me the previous webinar on MT4, I explained all the modules here, and MT5 absolutely has a very similar surface. And you know, the market watch navigator window, the data window, and also chart area. And here is we have the terminal window in MT4, but here the name is changed to toolbox. That's it. Okay, but let's get started with one of the most practical features of MT5, which is the new order window. The new order window is in MT5. You can get through the new order window using various short keys, or just at the main menu here, the new order, you can click, or on each instrument you can just easily right click on them, and then choose the new order as the first option here, and then you will see that a window like this will pop up. But let's get through more details about this very functional window that all traders usually use this a lot. This is the heart of the let's say MT4 or MT5 and any other trading platform. Okay, so the new order window in MT5 is where the rubber meets the road, exactly, serving as your control panel for market entry and exit. It's here that you execute the cornerstone of trading, market execution orders. These are orders to buy or sell at the current market price, vital for swift entry into the markets. Then you see here as a field policy. The field policy is an important part. It determines how an order is executed in terms of price and volume. Fill or kill is one such policy, ensuring the order is executed only if the entire volume can be traded at once. Now, let's ensure you understand how to operate the quick trade setting. By enabling them, you can execute trades directly from the chart with just one click, enhancing speed and efficiency. If I jump on my MT5 again, for example, you see we have this one-click trading here that you can easily activate through the right-click menu on chart area. And then you will be able to open your market execution orders, means instant orders, as a sell orders or buy orders instantly during the price movements. Cool. Okay, so remember, when you sell, you open positions at the bid price and close them at the ask price. Conversely, when you buy, positions open at the ask price and close at the bid price, as you see here how we have two different prices, and I explained it in our previous webinar, but for those who are new to this, let's explain that. Here you can see we have two prices in Forex. One of them is a bid price, one of them is an ask price. You see ask price is always higher than the bid price, and the important thing is that when you sell, You open positions at the bid price and close them at the ask price. Conversely, when you buy, positions open at the ask price and close at the bid. So these prices are essentially visible in the new order window as you see here on my presentation, and keeping you informed for precise decision making. Lastly, setting your stop loss or take profit levels requires a keen understanding of these bid and ask prices, guys, because the stop loss or SL and take profits or TPs must account for the spread to prevent premature stop outs, particularly in fast moving markets. By mastering the new order window, you align your trading approach with MT5's advanced capabilities, setting the stage for informed, strategic, and responsive market participation. Okay, so keep in mind that all the orders as a stop loss or take profit will usually be executed at the opposite price of which you opened your position. Okay, that's cool. So let's move on to pending orders. Pending orders in MT5 are instructions to execute trades when certain conditions are met only, offering traders the ability to automate their entry and exit points in the market. Here is an overview of the types. Let me just show you again on the MT5 as well. For example, through the new order, you can just change the type here, depending order and the types. You see there is the 6 different types of pending orders you can get through in MT5. So, okay, let's explain them one by one. First, we have the buy limit here. Placed below the current price, this order is set to buy at a lower price, anticipating the asset will increase in value after purchase. Then we have the sell limit. We know that positioned above the current price, it's in order to sell at a higher price, used when you expect the price to drop after reaching a certain level. Then buy stop, which is set above the current price. A buy stop order is triggered when the price climbs to a specified level, useful for traders who anticipate the price will continue to rise. And then the sell stop. We explained them also in more details in our previous webinar, but we know that sell stop is located below the current market price. This order will trigger a sell position when the price falls to a predefined level, which can be helpful in limiting losses in a falling market. Okay, each pending order type serves a specific strategic function, allowing traders to align their market entry and exit with their market predictions and risk management strategies. Now, focusing on the buy stop limits order, which is new specifically in provided in MT5. This hybrid order type merges the elements of stop and limit orders. You use it when you want to set a price above the current market value, where you believe the price will continue to rise, but you also want to define the maximum price you're willing to pay to avoid overpaying during rapid price movements. To set a buy stop limits order in MT5, first, you need to choose the buy stop limit through the different types as the type of your pending order. Then you need to set the stop price at the point above the current market price where you want the limit order to be placed. Then define the limit price below the stop price to specify the maximum price you're willing to pay for the asset. So when the market hits your stop price, let's see what will happen. The limit order is placed. Okay, so If the market price does not reach your limit price, the order will not be executed, thus ensuring you do not buy at a higher price than you are comfortable with. This order type is particularly valuable in volatile markets where prices can fluctuate rapidly, and precision in entry points is crucial for successful trades. Now, why use a buy stop limit order on MT5? That would be a great question. Uh, Firstly, it allows you to be strategic. Entering the market as an uptrend is confirmed, but before it moves beyond your preferred entry point. So it provides also discipline, ensuring you do not act on impulse and purchase at an undesirable price. Uh, and the third reason I can bring is that it brings clarity as you define the exact price conditions under which you wish to enter a trade. For instance, if you're trading gold and you believe that if it breaks a resistance level, it will likely continue to rise, you set the stop price just above this level. Then, for example, here I have the current price at the 2204, and then you can just set the price in 2206. This is the first step to take, and it will likely continue to rise, and you set the stop price just above this level. So then the limit price is then set slightly below the stop price, as you see here is a 2203. Securing it, it aims to actually secure your entry without risking overpaying if the price spikes momentarily. So the stop limit buy orders give you control by allowing you to specify and adjust the price you're looking to enter at, but also the price you're now willing to exceed. So this is an example of how MT5's advanced features cater to sophisticated trading strategies. Next, we have the sell stop limit order in MT5, which is another advanced pending order type that allows trader to specify an exact point of entry for selling an asset when they believe the price will go down after a certain level is reached. So here is how it works. First, the stop price is, we have the stop price. You need to choose the type, and then you see the price. This price is the stop price, and this is a trigger price that's below the current market price. When the price of an asset falls to this level, the limit order becomes active. The idea is to catch a potential reversal or a brief pullback in a downtrend. Then we have the limit price, or we see here as the stop limit price. After the stop price is reached and the order is triggered, the limit price represents the minimum price at which you are willing to sell the asset. Typically, it's set above the stop price, for sure, ensuring you sell at a price more favorable than the market may offer post-trigger. The self, oops, sorry, yep. The seller stop limits order is particularly useful when you expect the price to rebound briefly after hitting a certain downward price threshold before continuing its descent. This can be advantageous in scenarios where you forecast a temporary spike in a generally downward trading market. For example, if you're trading gold and anticipate that if it breaks below a support level, it will bounce back up briefly before falling further. So you can set the stop price just below the support level, and the limit price is slightly above the stop price where you believe the bounce will peak. So this strategy prevents you from selling at the initial break if the price is expected to temporarily improve. It's a powerful way to enhance control over the price at which you exit the market, capturing a better sell price in a falling market scenario, especially when you use the high level of leverage. Which your accounts will be more sensitive to unexpected market fluctuations. In that case, you can just try to predefine the very key level on the chart, and then you can plan and set your prices to execute a pending order like this using the, for example, stop limit orders. Yes, okay. Next one, I want to walk you through the market watch window here. You know that you can get through all the information you need about the trading instrument using the market watch. You can find the bid price, ask price, spread time, daily chart changes, which shows the price changes during the day session. And also you can see through the right click menu, you can get to much more features than of MT4. So the one that I would like to somehow focus on that is the specification window. The specification window accessible via the right click in the Market Watch menu of MT5 is a treasure trove of critical trading details and informed traders' decisions and strategies. Let's jump on this slide to see maybe a bigger picture of that. Looking at the contract specification of GBP USD in the MT5 platform, let's break down each section. You see there are many different lines and all the explanation here. I'm going to walk you through all of the details here because this is a very handful information you may use when you want to manage your risk or you want to control your positions anyway. First, you see the sector. The market category GBP USD belongs to typically Forex. Okay, so if that's a Forex, that's a metal, that's a CFD index or something like that, you will show the category of that tradable instrument here. So that would be a good clarification sometimes, for example, because people don't know if the cryptocurrencies are those cryptocurrencies belong to which category, because if we get down to the list, you will see some features like the calculation of the swaps or margins or something like that gonna be different between different categories. Then the digits, which is obviously number of decimal places, we know as a PEEP, and the contract size, the volume of a single lot of the currency per often 100,000 units of the base currency here is GBP. And then we see the spread, the difference between the bid and ask price list as floating, meaning it changes with market conditions. So it means, for example, during the news announcement, it could be the wider, or during the overlap sessions, it could be tighter. It depends on your trading strategy. So you can choose the best time of the day to minimize the spread cost for your trade. Then the stop level is the minimum distance from the current price to place stop loss and take profit orders. 0 here indicates no restrictions on this. You can place your stop loss at any distance of your order. That's an advantage of Errante's accounts. So margin currency, the currency used to calculate the margin requirements here in GBP, which is the base currency of the instrument GBP USD. Okay, so the margin currency is GBP as well, and the profit currency, but the currency in which the profit or loss will be denominated here is USD, which is your account currency. So if you calculate, for example, your PEEP value based on the GBP, and then you see a different number in your toolbox in MT5 or in terminal in your MT4 platform, don't get obsessed with that, because the difference has been rooted in the differentiation between currencies, between margin currency and the profit currency. So the calculation, how the profit is calculated, typically by the bid price for shorts and ask for longs. Then we have the trade execution. This defines the execution type, like market, for orders executed at the current market price. Which is a market price, because we have the another different type, which is an instant execution that is not included in the types of execution that Errante is providing. And then GTC mode is very useful to know that good till cancels orders remain active until they are executed or canceled by the trader, which means if you open a pending order, you will not be able to close it during the market close sessions or during the weekends or in the code sessions that I will explain what is that. So good to cancel mode means the orders remain active until they are executed or canceled in trading sessions by the trader. So you need to cancel them yourself. How to look at the MT4 here, new order through the pending order, you can see that the expiration is a GTC. You can change it to today or to a specified period, something like that, or a specified date, and you can choose between different types. Okay, which means for today, it means it will be valid until the end of today, and the specified means you can just easily specify the date and time at which your order will be cancelled if it is not executed till then. Cool. Okay, let me zoom a bit here to make it more visible. Okay, very well. Then we have the filling, as I explained, the order execution policy, such as fill or kill, meaning the order must be filled in its entirety or not at all. Which means if you place a one lot, you can't, the broker can't fill only, for example, the 0.5 lots of your order. It must be filled uh, entirely or not at all. Then orders minimum and maximum volume a trader can order, and the step, let's say, um, increments. And then we get to the swap types. In points showing the amount of interest paid or earned of holding a position overnight, that these have the let's say very specific formula to calculate. And the swap long and swap short is specific swap points for holding a long or short position overnight respectively. When you see the swap is negative, which means if you keep your position open during over uh, rollover times, during the night, you will be charged through this amount based on some calculation the next day. And if you find an instrument which has a positive swap, it means you're gonna earn the swap for keeping your position open overnight. It could be different for cryptos, for indices, and for any other instrument other than Forex instruments. And then the commission costs per trade, you're showing $1.5 per lot for each site. When you open a position, you're gonna get charged 1.5 USD, and then when you close the position, you will get charged the same amount as well. So which means you have to keep in mind that the charge for a full trade of one lot is $3, $1.5 per each side of the trade when you open and when you close. And then you have the sessions. You can see the trading hours for the instruments indicating when you can trade GBP USD, for example. And you see there are the different times as a codes. The codes means you can see the chart, but you can't trade it. For example, the charts will be available, the codes be received by the server from the 11 p.m. Sunday, but you can trade it from 11:05, which means you can see the chart from 11 to 11:05, but you're not able to trade it. It's really important to note that during the quotes time, you can't do anything with your orders. If you have a pending order, if you have for example, a remaining open position that is getting to your stop loss or take profit, you are not able to close or modify your positions during quote time. Very well. So by utilizing the specification window, traders can access all this detailed information. Let's also talk about the margin rates. That this is the extra feature that we don't have it in MT4, so it's worth to mention that the amount of money required to open and maintain a one lot position with initial and maintenance requirements often being equal based on the leverage you chose at the time you open your account. For example, here for one lot, the amount required as the margin or the minimum amount I have to have, for example, in my account is 4,235.37. So this is the amount I need to have in my mind, my account for a one lot trade. Okay, so this allows us to tailor our trading to the conditions of each instrument we trade, optimizing, let's say, our strategy, effectiveness, and efficiency. So let's move forward to the toolbox window in MT5, which is a comprehensive panel where traders manage their trades, view their account history, access news. You see they have a different tabs in toolbox window here. We can go access news and much more. For example, within the toolbox, the economic calendar is an essential feature that keeps traders informed about upcoming economic events that could impact the markets. Here, an overview of the right-click menu option in the economic calendar and their functions, which is the focus of our discussion in this slide. Let's say if you get to the right your calendar here through the toolbox, you see you have the balance, equity, freelance, all the exposure for your open positions, the history of your trades, and the news mailbox, and you see feature in MT5, which is a calendar. And on this calendar, if you just right click, you see you have a variety of options here to somehow apply on your calendar, to somehow customize it, to personalize it, and to use it in your favorite way. So let's get through some of these features, which is more practical for trade. Overview of the right click menu options in the economic calendar and their functions. First, you see we have the view or refresh. The refreshes the calendar to ensure the latest data is displayed. It's really important to check your connection when you're using the calendar, and then it's really important to refresh it if, especially if you are in the countries which uh, can't get access to a very fast uh, internet connection, something like that. And then you have the option to export that allows you to export the calendar data possibly to a spreadsheet for further analysis or record keeping. And then the time period filters, options like previous week, current week, next week, previous month. I just show you on this. Yeah, previous month, current month, next month. And then the priority you see sorts events by their potential impact on the markets from low to high priority, enabling traders to pay attention to the most market moving news. For example, you can tick on or tick off any of the events with the priorities you wish to see on your chart, for example. And then the currency or country filters events by currency or country, allowing traders to view economic news for a particular currency pair or country they are interested in or have exposure to. Then show on chart is a very useful function. When enabled, economic events are marked directly on price charts, providing a visual representation of when they occurred in relation to price movements. For example, here you see my chart. If I choose add all events, you see this at the beginning of my chart. So shows each flag shows a time, and if you stay on each one by your mouse, you will see, for example, is this one is the ECB Executive Board member Lane speech. That's it. Or right now, 1530, we have the NY Fed Empire State Manufacturing Index, which came better than. Another one is a actually widget on the website. Some platforms offer a widget that can be embedded in a website, useful for bloggers or financial analysts. And an economic calendar, App Store, Google Play, the applications opens the economic calendar app in the a respective store for mobile devices for traders who want to stay informed on the go. And auto arrange your grid. This is the somehow options will affect the layouts of the columns and the grid lines in the calendar view. A simple example of usage is here that, for example, let's say a trader specializing in the GBP USD pair might use the economic calendar to monitor upcoming UK and US economic reports. So they could filter events for the upcoming week to only show high priority GBP and USD events, ensuring that they are prepared for potential volatility during those times. Furthermore, by showing these events on the charts, they could study the historical impact of similar events on the pair's price movements. This strategic information helps in planning trades around these announcements, potentially setting up trades to capitalize on expected volatility or exiting positions to avoid risks. Here is another thing, accessing the trade report in MT5, which is another crucial, important feature this platform is offering. Accessing the trade report, which is essentially your trading statements, can be done through various pathways. Here is how to navigate to it. First, through the account history. This is the history of your account, okay? Through the account history tab, in the toolbox at the bottom of the MT4 platform, you'll find the toolbox section. As we are here, you can see all, and click on the account history tab. In here, you can see all your past trades. and right click within the tab and you will find options to save as an Excel, export it as an Excel file, or the Internet Explorer will just easily the overview, which shows you here on your chart area. Using the save as report or save detail report function, after right clicking the account history tab, select save as report. Okay, and this option allow you to generate. Okay, let's see what is the statement report in MT5, which is really a crucial part of trading system. It's a comprehensive record of a trader's performance over a period. It's essential for assessing the effectiveness of trading strategies, managing risk, and making informed decisions to improve future trading activities. Here's a breakdown of the highlighted metrics in this statement. First, you see here the Sharpe ratio. Let me just show it with my laser point. Okay, Sharpe ratio. This is a measure of risk-adjusted return calculated by taking the average return earned in excess of the risk-free rate and dividing it by the standard deviation of the return. A Sharpe ratio 1.03 indicates that the return is higher than the risk-free rate after adjusting for volatility, which is generally considered satisfactory. For instance, if the risk-free rate is 2% and your portfolio returns 5% with a volatility, a standard deviation of 3%, for example, the excess return is 3%, 5% minus 2%, and the Sharpe ratio would be 1, which means that 3% divided by 3%. Then we have the portfolio factor. The profit factor you see here is at 8.50. Profit factor, this ratio measures the effectiveness of a trading strategy by dividing the gross profit by the gross loss. A profit factor of 8.5 is outstanding, indicating let's say that for every dollar lost, the account earned $8.5. For example, if a trader made 850 in profits and 100 in losses, then the profit factor would be 8.5. The other important factor we have is a recovery factor. The recovery factor here you see is at 34.26. It assesses the risk a trader is taken to earn their profit. A recovery factor of 34.26 suggests that the trading strategy is robust, having recovered from drawdowns 34.26 times the money it had once lost. For example, if the maximum drawdown was $100 and the total net profit was $3,426, the recovery factor would be approximately 34.26. And the next factor is maximum drawdown. It represents the largest drop in account balance from the peak to a trough before a new peak is reached and is a critical measure of downside risk. If a trader's account went from 10,000, let's say, to 9,770, the maximum drawdown would be 230 or 2.3%. The relative drawdown shows here, you see, the balanced drawdown maximal, which means it's calculated based on the peaks and troughs of the balance, not the equity of the account, just the balance. And here you see the balance drawdown is 0.05%, indicates a very small portion of the account was at risk, demonstrating solid risk management somehow. By understanding and regularly reviewing these metrics, traders can fine-tune their strategies. High recovery and profit factors alongside the manageable maximum drawdown and a positive Sharpe ratio collectively indicate a potentially successful trading approach where returns are earned with controlled risk and drawdowns are efficiently recovered. So this is a good way to evaluate your performance, or if you want to evaluate someone else's performance and they want to send you a statement as a friend, as a mentor, or as let's say just the business partner. So here we're gonna get through the very important concepts. The concept of expected payoff in trading, which is a statistical measure that reflects the average amounts you can expect to win or lose per trade based on historical data. It's a vital metric for evaluating the potential profitability of a trading strategy over time. The expected payoff formula calculates this metric by taking the average profit from winning trades weighted by the probability of a win and subtracting the average loss from losing trades weighted by the probability of a loss. Now, don't get confused, please. Let's dive into the components of the formula shown here in red. Yes, you see at the top of this slide. As you see, I put some of this information in red rectangle, and I'm going to explain them one by one. First, we have the percentage of profits, profit trades, percentage of total. This represents the probability of frequency of winning trades within a series of transactions, then or trades, let's say. And then we have the average profit, which is another important component of this formula. The average profit is the average amount gained from winning trades. The average, the sum of total divided by the number of trades that we have done. And then we have the percentage of losses or lost trades as a percentage of the total. Similarly, this is a probability of frequency of losing trades. And then the average loss, the average amount lost from losing trades. The value in the red rectangles provide the actual numbers of these components. And you see we haven't had any loss in this account. By the way, let's do the formula here. Yes, profit rates here is 100%. Meaning all trades were profitable in the given period and unusually high success rate. It's really unusual because it's the demo account first, and then I actually made just a few trades. So you can get through the statement of your trading history and you can see all these numbers. Now you know how to evaluate them. But to get through the expected payoff, I'm gonna tell you how it is calculated and how it can guide you through your trading journey. Okay, so let's have this statement as an example and get through all the components that it has. Then we have the average profit here. The average profit is calculated as $7.44, which is the expected payoff in this case, because there were no losses. Based on this formula, when you have no losses, this part of the equation will be 0. So the percentage of profit times by average profit will give you the expected payoff as we see here. Okay, so a positive expected payoff indicates a potentially profitable strategy over time, while a negative one suggests losses. So let's get through the strategy. Perfect. Okay, a strategized adjustment. If the expected payoff is low or negative, traders might seek to somehow alter their strategy, perhaps by tightening stop losses, aiming for high profit targets, or adjusting trade frequency. Then a risk assessment. Knowing the expected payoff helps in risk management, allowing traders to determine how much capital they can risk per trade while maintaining a positive expectancy. It's essential for traders to regularly calculate and monitor the expected payoffs. And thanks to MT4 and MT5 platforms, they calculate this for us. Okay, so these are two main reasons for understanding how expected payoff can help traders. And the last one is evaluate efficiency. It means it provides a clear picture of a strategy's effectiveness. A positive expected payoff, as I said, indicates a potentially profitable strategy over time, while a negative one suggests the losses. So when you have all the components of the formula, you can easily calculate this for yourself. Now let's get through the another important aspect of this trade, expectancy or expected payoff. Uh, to see, let's delve into the concepts of this to see how it can be helpful for us through four illustrative examples we have here. First is a high profitability percentage. As you see, low reward scenario we have here. We have a strategy where 70% of trades are profitable with an average profit of $100, while 30% are losing trades with an average loss of 150. To calculate the expectancy, we do this all the math and we get the $25 per trade. What is the interpretation of this expectancy? Although most trades are profitable, the higher average loss reduces the overall expectancy. Yet, the strategy still yields a positive expected gain of $25 per trade, indicating profitability. So this is a high profitability percentage with a low reward. Okay, and the next example here is the low profitability percentage, high reward scenario. In this scenario, only 40% of trades are winners, but they yield a high average profit of $200. The losing 60% of trades incur an average loss of $100 only. So the expectancy works out to $20 per trade. What is the interpretation of this strategy here? Even with fewer winning trades, the substantial profit from those wins offsets the losses, leaving a positive expected gain of $20 per trade, which can be considered a viewable strategy somehow. Okay, and example number 3, break-even scenario. This scenario has an even split with a profitability percentage of 50% and average profit of 150% and an average loss of $150. The expectancy calculation is simple. As you see here, if you put all the numbers in the formula, we'll get the 0 per trade, which means the strategy in this case breaks even, meaning it neither makes nor loses money on average. This may be a stable but stagnant approach requiring tweak for profitability. You may need to get somehow, let's say, to improve your strategy or improve your TPs or stop losses, maybe to improve this expectancy and pull it to the positive territory. And the example number 4 is a non-profitable scenario. Here, as an example, we have 30% of trades are profitable with an average profit of $100, but a high 70% probability of loss with the same average loss of $100. Then you can imagine what's going to happen. The expectancy is minus $40 per trade. As an interpretation of this negative uh, expected payoff here, we can say this strategy is expected to lose $40 per trade on average, signaling a need for significant modifications to either increase the win rate, increase the average win amount, or decrease the average loss to become profitable. I would say understanding expected payoff is in these different scenarios is crucial for a trader. It helps to measure the efficiency of a trading strategy, to adjust risk management, and to set realistic expectations for potential profits or losses. So it's a foundational aspect of trading system evaluation and necessary for strategic planning for sure. Very well. I see we get to the end of our webinar for today. That's enough for now. And so if you have any question, please just write it down to me through the chat box. I would be more than happy. Okay, we have a question. What is exactly the trade expectancy? What we expected to learn from it? I would say, as I mentioned, the trade expectancy, or let's say the expected payoff, is the average amount you can expect to earn per trade based on the trading system you are using. It's important because it gives you an objective measure of your trading strategy's effectiveness over time, and it allows you to make informed decision about the strategy adjustment, which means, for example, if you get through your statement on MT5 and you see you have a very good positive expected payoff, which means your strategy is working very well. The only thing you need to do is maybe increase your capital, increase the amount you're trading with. That's it. But if you see a very low, near zero expected payoffs, or a negative expected payoffs, which means your strategy doesn't work very well. So you may somehow, let's say, profit a big amount in one trade, but during the time you're losing money. Another question is, how often should I evaluate my trade expectancy? Okay, it's a good question. It's a good practice to evaluate your trade expectancy regularly, such as monthly or quarterly. This helps in ensuring that your strategy is still performing as expected and allows for timely adjustments. Another question is, can trade expectancy help in risk management? Absolutely. Absolutely. Understanding your trade expectancy can help you manage risk by setting more informed stop loss orders. We're gonna get through all the details about how to evaluate and how to improve our risk management strategies in our upcoming course in 5 sessions about the risk. And another question is, can a strategy with a high win rate still have a negative trade expectancy? Yes, a high win rate doesn't guarantee profitability. If your losses are significantly larger than your wins, you can still end up with a negative expectancy. It's crucial to manage both the win rate and the size of wins relative to losses. Very well. Uh, Here is another question about how we can evaluate our trading strategy using how can we improve a trading strategy with a break-even trade expectancy. I would say to improve a break-even strategy, you could try to increase your average win size, decrease your average loss size by playing with your stop loss and take profits levels. Also, you need to enhance your entry or exit criteria or manage your positions better to minimize the losses. That will help you to get from the break-even trade expectancy to the positive expected payoff or trade expectancy. Okay, guys, any other question? Okay, I guess that's it for today, guys. Thank you so much for participating actively in this webinar today. It was very exciting journey for me, and I wish you all the best. I hope to see you in the next webinars. And please be informed that our new course about the risk management and forex trading gonna get started very soon. So as we wrap up today's webinar, I'd like to thank you all for your active participation and insightful questions. Thank you so much and have a great evening. See you next time.